With a market valuation of $657.19 billion as of October 2022, Tesla is the sixth most valuable corporation in the world. How much will it be worth, and what is the return on investment for Tesla stockholders by 2030, given that higher earnings are anticipated in the upcoming years? Welcome back to Everything Tesla Stock, everyone. Over the years, Tesla has consistently reported excellent profit margins. Tesla announced $621 million in sales for the third quarter of this year, up from $385 million in the same period last year. Revenue and net income for the same period were $21,454 million and $3,292 million, respectively. Despite increasing its profit margin, Tesla has not seen a positive reaction from investors. As of right now, the stock price is battling just around $200, and it's not apparent when this will improve or worsen, bearing tactical actions like a share purchase. Leo Koguan, a founder of XI International and a Tesla investor, believes that a $1 trillion share repurchase might push the price of Tesla shares to $5,000 in the near future. Is this the peak price for Tesla's stock? To find out, keep watching. But before we continue, don't forget to switch on notifications to stay up to date on everything Tesla is up to, and like and subscribe for more stuff like to this. After Elon Musk and Larry Ellison, Koguan is the third largest individual shareholder in Tesla. The billionaire, who was born in Indonesia, has been a longtime supporter of Tesla and presently holds roughly 23,201,500 shares in the automaker. He has been a fervent supporter of Tesla's share repurchase program. He urged the automaker to declare a $15 billion stock buyback in May of last year, with $5 billion going towards it this year and $10 billion the following. He reaffirmed in a tweet from October that Tesla needs to buy back shares since the company's P/E ratio is compressing, and that the only ways to fix this are through a buyback or by tripling Tesla's earnings. Tesla's financial situation has to be extremely strong for it to pull this off. Undoubtedly, Tesla has been doing well financially and is presently debt-free, proving that it is more than just an automotive manufacturer. Should Tesla be able to increase its profits, it might be able to finance a repurchase of shares. If Tesla is able to pull off a $1 trillion buyback between 2026 and 2030, Koguan predicts that the company will have a massive market capitalization by 2030. In a tweet, Koguan stated that he has asked Tesla to repurchase $100 billion in shares between 2022 and 2026, followed by a $1 trillion buyback between 2026 and 2030. In more detail, Koguan said that Tesla would withdraw 1 billion shares from the 3.14 billion shares that are now available, bringing the total number of outstanding shares down to about 2.14 billion if it were to buy back shares at $1,000 per share between 2026 and 2030. Investors' access to fewer shares will result in an increase in the stock price from $3,000 to $5,000 per share. While this sounds very sensible and would undoubtedly pique the curiosity of Tesla investors, the issue remains: how can Tesla raise the necessary funds to finance a $1 trillion buyback of its shares? Speaking about this, YouTuber and Tesla investor Dave Lee said that if the company experiences successful increases in earnings from its humanoid robot and FSD technologies, it may be able to reach this milestone. The goal of Tesla is anticipated to be expanded by the Tesla bot, which will make AI more widely available and affordable in addition to enhancing sustainable energy through the production of electric vehicles. Dave Lee claims that Tesla can currently afford to repurchase 80 to 90% of its shares and does not have any pressing spending needs. Lee went on to say that if Tesla is successful in implementing its FSD software and generates an operational profit of between $20,000 and $25,000 per vehicle, it has the potential to raise over $1 trillion if it sells 10 million vehicles annually, or $250 billion every year for around 4 to 5 years. Given that Musk revealed Tesla intends to increase EV production to 20 million vehicles annually by 2030, this could actually be feasible. With regard to its FSD software, Tesla is making progress, but there is still a long way to go. While the program is still under beta testing, Tesla shared some important facts about it during the recent Tesla I-Day. It is anticipated that FSD will soon be available on the market, even though the automaker has not yet disclosed a timetable for when it will exit beta testing. Tesla reports that there are about 160,000 FSD beta testers this year, compared to just 2,000 last year. Nonetheless, there are a number of regulatory snags related to its security. In a recent interview, Musk revealed that the FSD system will likely cost $15,000 and be available for people to use by the end of this year. In addition, he disclosed plans for a worldwide deployment by year's end, subject to regulatory clearance. The FSD team at Tesla asserted during the company's most recent AI Day that they have been growing the training infrastructure by as much as 40 to 60%, which is a significant improvement over their prior efforts and progressing quickly. Although there have been a lot of infrastructure improvements lately, it's uncertain if FSD software prices will increase once more prior to a broader implementation. Lee continued by saying that Tesla might be able to raise the $1 trillion required for a share repurchase in the upcoming years if Optimus proves to be a tremendous success and the company is able to sell millions of Tesla bots by 2029. According to him, Tesla could produce far more than the required quantity in 4 years if it achieves an operating profit of $20,000 per robot and then sells 20 million units in a single year. He did point out that a lot of this would depend on how long it takes Tesla to increase the number of humanoid robots it can produce in a year and how quickly it can ramp up production. Not every investor was genuinely impressed with the Optimus prototype after its recent debut. Musk acknowledges that there is still a long way to go before it is ready, but he thinks most people are still unaware of the technology's potential. Musk claims that Tesla intends to build millions of these robots and sell them for far less than $20,000 per. In another statement, he said that in 5 or 10 years, he thought the Tesla bot was an amazing invention. In a few years, Tesla may be able to generate enough revenue to finance a share repurchase if it can expand the distribution of its FSD software and ramp up Optimus production. In addition to the FSD and Optimus technologies, the upcoming robo-taxi and semi-trucks from Tesla might bring in a sizable sum of money for the team. Koguan referenced a Tesla robo-taxi profit model in a recent tweet. According to him, Tesla could make $200 profit annually on its own tiny robo-taxi by selling the car to private owners for $100,000 per FSD and charging up to 20 to 40% in fees. Koguan thinks that if Tesla can pull this off, the returns to shareholders will be substantial. According to Koguan, he is fervently optimistic that Tesla's market capitalization will surpass that of both Apple and Aramco put together in the future. Musk made the same statement following Tesla's third-quarter earnings announcement. The business's revenue of $21.45 billion was little below than experts projected $22 billion. Musk expressed his belief that Tesla can surpass Apple's current market capitalization on a recent earnings call. He also mentioned that he could see a future in which Tesla's value may surpass that of both Apple and Saudi Aramco put together. Musk predicts that the vehicle firm will eventually be nearly twice as valuable as Saudi Aramco, despite the fact that he doesn't think this would be simple or even happen anytime soon. Koguan shares Musk's belief that Tesla will have a phenomenal fourth quarter this year. Though many Tesla supporters are in favor of a share repurchase, some question if the timing is appropriate at this point. According to some investors, Tesla shouldn't repurchase shares until it has sufficient cash on hand to cover any unforeseen circumstances that might have an impact on the company's future performance in the market. The car company's valuation would suffer if it had to borrow money or sell some of its shares in the absence of this cash reserve. Some people think Tesla should put more of its resources on innovation, like as expanding its factories or manufacturing more 4680 cells, rather than funding a share buyback. All things considered, investors in Tesla must keep a careful eye on the company's performance. Analyzing the costs associated with investing in Tesla or any business is crucial. As a result, investors may be more deliberate with their spending and decide whether to sell or hang onto their shares with greater